Hi, everyone. This is Jason Barack of Wall Street from Main Street, and this is your Wall Street from Main Street podcast for Thursday, March 3rd, 2011. Today, we're here with a very special guest. This is his first podcast. Our special guest is a new face to Wall Street from Main Street. He's now in our company. His name is John Manfreda. How are you doing today, John?
I'm doing great. I'm just happy to do a podcast right now.
Well, I like your enthusiasm. So let's get down to some of the current events that have been going on this week, John. We're seeing, a lot of the stuff going on, Libya with, what's his name, Gaddafi?
Yeah.
Gaddafi.
Gaddafi.
Yeah, Gaddafi in Libya. So we're seeing, oil prices, and even the mainstream media, John, it seems now is talking a lot more about inflation than it's been in the past. What are your comments on the inflation and energy and food prices?
Well, right now, I think, we've been expanding the money supply rapidly, and that doesn't look to change anytime soon, especially with these low interest rates by the Ben Bernanke, as they would call them on those videos, those silver manipulation explained and everything. So right now, with the devaluation of the dollar, oil's going to easily go up, I see. And not only that, just the growing world population is going to skyrocket demand for oil. So it has two things going for it: the devaluation of the dollar and huge demand. And political unrest in the Mideast is, I think, going to also drive up the oil price, because a lot of the world gets oil from the Mideast. And when there's instability there, supply lines get cut off, and that cuts supply, and that will raise the prices. In 1956, or I'm not sure the exact year, the Suez Canal crisis, 10% was cut off around Egypt, and prices went up drastically, and history repeats itself.
Well, it looks like we could have another Suez type of incident again here, as Mubarak was forced out of Egypt. And, I don't know what guy's going to be installed next, or if the Egyptian people are going to get the democracy they want. We'll see what happens. But, I don't think this instability here in the geopolitics in the Middle East is, good for oil prices. And, because oil is so heavily involved, in food production here, it's like a negative feedback loop, too. So, like, the higher oil prices produce higher food prices, and it's just a negative feedback loop here. As, like in Egypt, I think like 80% of Egyptians, income goes towards food. So it looks like we're going to see a lot of continued, political instability in the Middle East, besides just Egypt. I think Saudi Arabia, John, has a protest plan for the next 2 weeks. There's going to be another protest. So, I mean, if Saudi Arabia goes, God help the oil price. I mean, I was reading Yahoo Finance, and it said that, $200 a barrel oil is impossible. It's not impossible if the dollar is devalued, another 40 or 50% with the inflationary pressures from the money creation you were talking about, or if, Saudi Arabia stops producing.
Oh, yeah, definitely. I agree 100%. And another thing is, it's not a secret at all that the Saudi people aren't happy with their government, and aren't happy, they haven't been happy for a long time. So they're seeing Egypt protest, and they see Egypt's victory of getting their government sort of changing, and they're going to think, hey, maybe we can do the same thing. So these riots can spread, and if it goes to Saudi Arabia, supply will drastically be cut. So these riots, went from Egypt, now Libya. There's no guarantee that they won't spill over to Saudi Arabia, especially with the people being very unhappy with their government.
Yeah, that's some very good points, John. I also think, too, that some of these, supposed oil analysts are saying, how the Saudis can bring on, excess capacity. Well, if they're going through, political problems with people marching on the streets and stuff, I don't know how they're going to be able to go, bring on excess capacity, and I don't think they can anyway. After the WikiLeaks stuff came out, I'm very highly skeptical that Saudi Arabia, can bring on spare capacity with anything, other than heavy sour crude, and, the world doesn't want heavy sour crude because there's just not the refining capacity for it that there is, for the light sweet crude, and That's what most people don't understand about oil, John, is the different types.
Oh yeah, definitely. And not only that, if you just look at it logically, Saudi Arabia, I would say they're the top foreign lobbying group to our government. They have numerous influence over our government. It's a lot more likely that they're cooking the books to make their reserves look higher than they really are than it is to make it look lower, because they want that influence. And I personally think they'll do anything to keep it up and keep it up. So, you know, the fact that they're not, and not only that, these oil fields have never been audited.
Yeah, it's a really good point, John. I mean, since Aramco kicked out what was it, BP and Chevron, not Chevron, but ExxonMobil, when it was like decades ago when they started
Yeah.
kicking out like the Americans and the British
Yeah.
out of Saudi Arabia there. I mean, they stopped auditing the fields. And then, like, if you're familiar with Matt Simmons' work, who wrote Twilight in the Desert, the late Matt Simmons, you know that one of his main arguments was that since the 70s and 80s, the Saudis and pretty much every other OPEC member has been, overstating their reserves so they can, keep increasing their production quotas. And it looks like they've hit a wall here, being able to increase production-wise.
Oh yeah, definitely. And not only that, we already know some areas in the Mideast. I was actually watching a documentary, and they said that Iran has already experienced peak oil in '78, and the fact that they won't experience it anytime soon, I think, sort of delusional. I think they've been supplying so much for so long. The fact that they're not out of reserves or running low, I think, you got to take a. I think it's just delusional to think that they're not.
Well, I was skeptical that the Saudis had the reserves they claim, because when oil a couple years ago, before the 2008 collapse, when oil got to, how the Saudis didn't bring on really any spare capacity. If oil's at 147 a barrel, then John, right, and my main product is oil, right? I'm going to flood the market. Probably,
Yeah.
right? Wouldn't like if I could sell it for more than two times what it normally is, right? I'm gonna go nuts. I'm gonna bring on all the production. So it was kind of surprising to me that they didn't sell it at, increase their production massively at that price. Speaking of now, John, let's get to some ideas here for people. For people who are starting to pay, we're starting to see high $3 a gallon gas prices at the pumps here in the U.S. Inflation starting to creep into the system, at the supermarket and elsewhere. Starting to see that now in companies in their conference calls. Regular companies talk about that here in the U.S. really a lot. Can you give investors some hedging ideas, like where they can, make some profits in the oil market, maybe away from some from some bad geopolitical ideas? Like which areas of the world are, safer oil investments?
Yeah, sure. I would say right now, if you're very concerned about riots, or even in Latin America, if you're concerned about the drug cartels, I would say the safest geopolitical area is Canada. They make their money off natural resources, so they're not going to demonize any of those companies. Like here in the U.S., the big risk here is when oil goes up high. I remember in 2006, you got Hillary Clinton, but you also got John McCain talking about a windfall profits tax on Exxon. So Canada, that's the danger of the U.S. is the windfall profits tax. So I would say, and then Brazil, really big in they're really big in the oil play. There's of course there's Petrobras, but Canada, they have a lot of good things. Like right now, Canadian oil sands. That's a really good investment opportunity. Right now, during the recent run of $60 a barrel to 100, they haven't moved much, because the thing with oil sands is that it's so hard to make that oil has to really go up for them to be profitable. So their stocks moved a little, but not much. But I think you get a really good value investing in like a company like Suncor. The symbol is SU. They're a $64 billion company, and the bulk of their revenues come from oil sands. And as oil price goes up, oil sands become a more logical investment and way to get oil. So uh, I think Suncor, and another thing is, if I know a lot of people that work and have 2 or 3 kids, or I know some people that have full-time jobs and then bartend on the weekends because they're trying to pay down their debt. If they don't have the time to look at individual stocks, they can also get like a Canadian oil sands trust, which is a pink sheet. The symbol is COSWF period PK. So I think Canadian oil sands would be a really, if you're looking for value and a really profitable way, I think those would be good. Another good way is the Canadian Energy Trust. Those are very safe. Peter Schiff in his book said they're like bonds, but I don't think that's too much because I'd stay away from bonds. But what bonds were in the 80s, I would say. And they have, there's some good ones. The one oil area is the Bacon area or Bakken area. That's supposed to have a lot of light and sweet crude oil. And the beauty of these Canadian Energy Trusts, their dividends are around 6 to 7%. Some of them are up to 10. And not only that, their dividends are once a month. They're not like some where it's like every quarter. They're once a month. So it's like you get out of the dollar by buying these Canadian Energy Trust, and your dividend will get bigger as the Canadian dollar strengthens against the U.S. dollar. Some companies that are pretty good is one is Baytex Energy. That's it's like around $57 a share, but it's backed up by around almost 197 million barrels of oil in their reserve report. It's very good. Another good one is NRay Plus. That they're in the Bakken area. They have a lot of light and sweet crude oil, and they also have associated gas. They pay a dividend once a month. I think that will be up. And the beauty of these Canadian Energy Trusts is their taxes. They haven't moved up too much because in 2011, they used to not be taxed, but in 2011, they're being taxed at corporate income tax rate now. And the thing is, it's not like the American corporate income tax. Their tax rate's around 15 to 18%. And that tax has already been factored into the stock price. And if you look at their dividends, a lot of them have kept their dividends going. So you can see it's not going to have, that big of a profit. So this might be a good time to buy these. I think they probably have more potential than a general large cap oil company or something.
Those are some good points, John. You actually answered a lot of my questions before I was going to even ask them, because I was going to ask you about, the stronger Canadian dollar, the commodity-backed currency there, and then the tax advantages, if there were any, or the tax consequences, if there were any. So I'm looking at a chart of a Suncor Energy symbol SU you mentioned earlier, and it's at around $48 a share today. It closed around, but it's all-time high is actually around $70. So it's just under $70 at $68. So it looks like, with the higher oil goes, there could be, more value there, because I think, with the supply demand fundamentals for oil, growing world population, and the fact that the currencies are being debased so rapidly, especially the dollar, I think there's still a lot of value there for Suncor. And Suncor pays a dividend, right? So people can be patient, with the stock.
Oh, yeah. It pays a small dividend, but it does pay a dividend. And the thing about the oil sands is that since they're hard to do, they become more and more profitable during higher times. And the beauty is the oil market sort of already crashed when it went from $140, $145 to $35. I don't see it crashing again. The world population demand is just too much, and there's no way the Fed's going to stop QE. I think they've unloaded a gun, or they loaded a gun, and they're just going to keep shooting until all the bullets fire out. And when the bullets fire, or when they're out of ammo, that's probably when the dollar could collapse.
Well, they have unlimited ammo, John, because, who does the Fed really answer to? They don't really answer to Congress. They don't, you're just hearing about, the stuff that happened during the 2008, the truth about the 2008 bailout was just coming out in the last few months, exactly how much money, and this might not be, all the truth. that, like trillions of dollars the Fed gave out, to South Korean banks, to South Korean central banks, to European central banks, to, other investment banks that are in Europe, to, Ford. They gave out the bailout money to McDonald's, to Harley Davidson. I mean, why are these companies getting, bailouts from the Fed, John? I mean, like, the stuff that's just been going on, these corporations were not run conservatively. A lot of them, had these crazy, financial arms like GE Capital and stuff like that. It just boggles my mind that, we're finding out about this stuff so later, and it still might not be all the truth. And, another $9 trillion was just, created with a keystroke. So I think these are very valid points. I think oil is a very good market, for people to have positions in, to protect themselves from higher gas. At least, if your oil stocks are going up, like it doesn't hurt you as bad at the pump, right? Or, at the grocery store when we're paying, higher prices. So I think that's a good way to go here. Do you have any more speculative stock plays for people out there, John?
I guess my favorite small cap is DPZ. Has a lot of good assets in Latin America.
Oh yeah, I'm familiar with BPZ Energy. Yeah, they have a large institutional interest from George Soros's energy hedge fund, and they just increased their P2, their proven and probable oil reserves by a lot. Yeah, so I know a lot about that company. I think that's a good investment, John. And then they have, a lot of natural gas that's coming online in a couple years too. So that's just their oil. So you get their natural gas for free.
And I actually think the natural gas is a good contrarian play, because right now with the glut, the price has been sort of sideways or going down a little bit. But as they continue the devaluation of the dollar, natural gas is eventually going to go up. There's no way, I don't see it going in, and China's already come in and made deals and that I think will push it up some too. So, and the growing world population, this doesn't just go for oil, but for a lot of other energies too. So, I think natural gas might be a good speculative play too.
Now, John, do you have any safer ideas how to invest in natural gas, while we wait for the natural gas price, to recover? Like a company, that's not out there necessarily drilling, but somewhat, kind of a picks and shovels type of company?
Cheniere Energy that's a small, that's, a cheap company right now, sort of, picks and shovels, I would say. I think they're pretty good. They operate a serial trail pipeline, and I think they're pretty good.
Yeah, I'm pretty familiar with LNG. That's the symbol. Yeah, they have a lot of storage facilities too. So they have an import-export business now for natural gas where, like as the natural gas prices go higher, they can ship it, outside the United States.
Yeah, and they're also in actually the marketing area, of natural gas, which will be great because I think China's just getting involved in natural gas, so demand's going to skyrocket. And during the winter, natural gas is needed for heating. And if you look at it, it's been a cold winter for me, so I could see natural gas over the years really coming up in demand. So
yeah, I know Rick Rule is very bullish on natural gas too, as a contrarian play. So I think over the next, 2 or 3 years, I think the natural gas price will probably, easily get over like $5 or $6 per whatever the measure. I think it's per million cubic feet.
And another one that has natural gas in it is Pengrowth Energy. They have some gas in their that's a Canadian Energy Trust. That's not very expensive, and they like the Canadian Energy Trust. They pay a dividend once a month, so you can use that as a way of salary, and then you could buy some junior miners or other companies with the dividend money if you don't want to reinvest it.
Does Pengrowth have have a high dividend yield, John?
Yeah, it has a pretty good dividend yield. It's around, I would say, it's around 5 to 6%, I would say. But as energy goes up, a lot of oil companies and energy trust, when the price of oil goes up, their dividends can also raise to a higher rate. So, like a lot of companies that had 10 to 11, 12% dividend yields don't have that type of dividend after the 2008 crash, but they've steadily grown. So, right now it's around 4 to 5%, maybe 6, but as gas prices go up, oil prices go up, the dividend can raise.
Okay. Well, thanks for the ideas. Let's move on to talk about food prices a little bit.
Sure.
Okay, I know you wrote an article on your blog recently at Freedomnomics. You wrote a blog article about fertilizer stocks and food energy prices. Could you just give people like an idea of, like why people should be investing, in companies that, that mine potash and other types of fertilizers like nitrates and phosphates?
I think, well, one, because as food demand grows, it's easily you need potash to help replenish the soil and keep farming growing. People, as the population grows, that's more mouths to feed, and potash is definitely a great fertilizer to get food. So as food prices grow up, the demand for potash to grow and grow and grow more food is going to go up. That's the simplest reason why I think everyone would need it, would want to invest in potash, and also it's a hedge. It's also to me a hedge protection against a weak dollar too. As the dollar loses value, prices of wheat, grain, all the stuff you plant in the ground go up.
It's a good point, John. And also, there just add in about crop yields too, because to plant crops, you need a certain amount of land. If the population is increasing, there's probably not as much land for farming, so we need to boost crop yields on the land that we do have. And
Yeah.
the best way to do that, is with fertilizers and potash.
Oh
So.
yeah, definitely. I'd say that's the potash is one of my favorite investments.
Yeah,
So
I think food and energy are two, good plays to invest in, two good trends that are in the commodity sector space, that are not precious metals. Before we close out, John, let's talk a little bit more about inflation and food prices.
sure,
I mean inflation and precious metals.
sure.
Okay, so Silver Wheaton just had announced earnings today, and their earnings were very good. They blew away analyst expectations. Their first major cornerstone silver stream at Penasquito, the gold core silver stream, is now up and running nicely. So and Silver Wheaton also just announced a dividend too. So that's going to be
Yeah.
a very strong buy and hold stock for people. I know you listened to other conference calls from some other gold and silver producers in the last week. Um, are you impressed with what you're hearing, or do you think people should be, more cautious at this stage to invest in gold and silver companies?
I'm pretty impressed with what I'm hearing with some of them. CDE, I think they've really got a lot of their uh, bad management or things. I think they've really reduced that, and I think they're going to up production. They said they're going to up production, and they're more leveraged towards the silver price. So as the silver price goes up, these stocks will go up. So I think now's as good as any time to get some of these. Silver Wheaton. The great thing about them too is that all their costs are fixed with these royalty companies. These royalty companies, I think, are a bargain because their costs are fixed. One of the dangers about mining companies is I actually sold my gold corp and bought oil. Is even though gold's been outperforming oil, I'm not sure if that will be the case with all this geopolitical unrest and the world demand. Silver, I think, will perform because it has a consumption aspect of it too, and there's such a shortage of it. I think silver mining is going to be great, and these royalties with the fixed cost as the prices go up, they're going to skyrocket. I think mining's great. I think royalties are just a bargain right now.
Yeah, I'm in the news in the last week or so. Like the U.S. Mint came out and said it's out of what silver blanks to make U.S. silver eagles with. Is that what you heard also?
Yeah, I've heard that the mints are running out with silver for silver wheaten. I heard they were running out of, I'd say a month ago or a couple of weeks ago, they ran out of 100-ounce bars because demand's so high. And not only that, you got in the U.S., Virginia talks about minting its own. Yesterday, there was an article in the Richmond Times minting its own silver coin, or not silver, just gold or silver coins for their Commonwealth. And South Carolina talked openly about having a backup currency just in case the dollar collapses, backed by silver and gold hybrid. So I don't know if this thing will materialize, but the fact that they're talking about it shows how is bullish for silver and gold and all these metals.
So, John, you said you still see value in like a Coeur d'Alene, which is a C as in Chad, D as in
Yeah.
David, E as in Eric. Do you see value in any other gold and silver companies like some of the royalty companies you mentioned or some of the regular gold and silver miners?
Yeah, I see a lot of value in a lot of them.
Well,
Petro.
yeah, just name a couple of them, John. You don't have to give us like a whole list. Like just a couple of them
All
for
right.
people, to do more research on.
Oh, Preetnum Resources, I think is a good one at really cheap. Of course, Minefinders, I think is a really good bargain. Uh, Minefinders, another one. Of course, there's Silver Wheaton.
Oh,
Silver Standard is a solid one too. So those are some ones to I would say take a look at.
yeah, I was listening to the conference call for Silver Standard yesterday, John, and their operational turnaround, their fundamental turnaround at Porquitas there in Argentina is really great. They're really struggling last year when they try to bring that mine online. And
Yeah.
they're going to be producing 8 million ounces of silver this year from that one mine, so
Yeah.
that's pretty good. I mean, it's not their original production guidance, but
Mhm.
it's getting there. And it's they're going to work through the problems. What most people don't understand, with mining, the people who are new to investing in gold and silver and other mining stocks, is how difficult it is for the most part to bring these large mines online, especially
Yeah.
if it's an underground mine. I mean, the open pit mines are hard enough, but if it's underground too, it's even harder. So these things, like with the original production guidance, if management's trying to impress Wall Street too much, these things tend to they tend to overpromise. But like I listened to the Mindfinders conference call too.
Mhm.
Even management was on there, apologizing to people for overpromising, originally bringing the Dolores mine online for mine finders. They're like, oh, now from now on we're going to set realistic production goals at the mine, and that's what you want to hear. You want to hear an
Yeah.
honest management.
Yeah. Actually, another one I think's pretty good is Revit Minerals because it's a silver copper sort of hybrid. They have a lot of copper and a lot of silver. There is some lawsuits tangled up, but I think eventually, when the economy keeps deteriorating, I think they're going to eventually just want jobs and they're going to open up that mine. So I think Revit's something you should add to your stock list. They have good silver copper hybrid.
Yeah, that's a very good junior play. They have one producing mine, the Troy mine, which is
Mm.
producing 1 million ounces of silver already, and I believe 11 million pounds of copper. So silver and copper are both very high. They're making a lot of money at the Troy mine, but the whole key to that company, and I don't think the market is valuing this at all, is Rock Creek. And that's just a monster project. That's one of the 10 largest silver projects that is undeveloped left in the world.
Oh yeah, I agree completely. So that just came to mind. That's why I was like, oh, I gotta put this one out there for people to research. So
Yeah, I mean, we're just mentioning companies here for people to research here. So, like, we don't want people to go out immediately and buy. People need to, be diversified. They don't, go out and bet on it all on just, one gold stock or one silver stock. They need to have, like, I'm sure you have a whole portfolio of these types of stocks, John, and that's how you protect yourself in your investments.
oh yeah, it's definitely because you never know what can happen. You never know. Some sort of accident could happen. The company could get sued, and your portfolio is gone, or sometimes the weather. Of course, I'm not talking about Bernanke's weather, but an actual storm could come, and that could cause problems for you know for other or a natural disaster. So like there are a lot of things. That's why you want a different mine, a whole basket of them to protect you, because one mine can, or not one mine, one company, that's very risky. That's like gambling. But a couple of companies is you would need to play, and if you don't have the money for one company, you can buy a junior minor ETF or a minor ETF.
So like a GDX or a GDXJ or an SIL then.
Yeah.
Okay, well, to wrap things up here, John, do you have any more comments on inflation?
I would just say it's something that's, I think, painful. Inflation's a definite. Uh, I hope hyperinflation doesn't come. So I just say protect yourself. Make sure you get good inflation hedges in your portfolio, and the demand's going to skyrocket prices too. So it's not just the devaluation of the dollar, but this in 2010 we didn't really see much demand pick up, but you see China's GDP growth at 9%, 10%. You're going to see a lot of emerging markets develop uh, more and more. So that's going to pick up even more prices. And I don't see any real change in monetary policy that's going to really help the U.S. These low interest rates, they always create asset bubbles. They devalue the dollar. The money supply is expanding, so it's doesn't look good for the value of the dollar.
Okay, John. So, before we go here, and before you tell everyone, where you can find your work, do you have some predictions for, commodity prices maybe for 2011, and then we'll let you go.
I guess I can try some predictions. I'm not too much of a year prediction guy. I guess oil, I would say would go up to 145 or 150. Silver, 48 to $50. And those are my just, I guess, two predictions right now. I can't really think of others. If you want to read my work, my website is freedonomics.com. It's FREEDOLNOMICS. So I hope you check it out. I like it. Of course, I'm the writer, so I should like it. So, and that's pretty much it. So,
Well, thank you very much for your time, John, and we look forward to hearing back from you on future podcasts.
all right, thanks.